Bank Nifty is trapped in an extreme 150-point range, while futures carry an unusual premium and volatility stays below 13. But why? The real danger sits in that premium. If a gap up fails, buyers may unwind, collapsing the gap and triggering sudden downward pressure. Then what? Now, Bank Nifty faces 57,400 support and 57,550 resistance. A break decides the next move. And this is where things get interesting. Bank Nifty is currently pinned within an exceptionally tight range, forcing the index into a state of extreme compression. This lack of movement is happening alongside an unnatural premium in the futures market, while the India VIX remains suppressed below 13. This specific combination of high premiums and low volatility, 3-day holiday weekend, option sellers saw almost zero theta decay, meaning premiums refused to drop as expected. Comparing Nifty Spot at 24,360 against futures at 24,420 reveals a suspended 60-point premium gap. If a gap up occurs and call premiums fail to expand, buyers must unwind. As they exit, the 60-point gap suddenly collapses, creating intense downward pressure. This suggests that any initial upward move is likely a bull trap designed to exhaust buyers before the market takes a sharper turn lower. This chart shows the widening gap in domestic data. While wholesale inflation reaches 10%, official retail inflation remains reported between 1 and 3%. This divergence in domestic data is being compounded by escalating global stress, as the US national debt recently surpassed the $40 trillion mark. With global debt reaching these levels, the resulting uncertainty regarding future money supply makes it difficult for the market to sustain a high conviction rally. This 15-minute candlestick chart tracks Bank Nifty pinned between a 57,400 floor and a 57,550 ceiling. A break below the 57,400 floor opens a rapid descent to 57,000. Conversely, a confirmed breakout above 57,550 signals sequential targets at 57,700 and 57,900. This 150-point range is currently too narrow for effective scalping. Patience is required until a definitive break establishes the next 300-point trend. Under the bullish scenario, long trades should only be executed if the price can sustain itself above the 57,550 resistance level. If the index remains trapped between 57,400 and 57,550, the only logical move is absolute capital preservation. The bearish scenario targets 57,000, triggered if the premium trap springs and 57,400 support is broken. Overall, the environment remains flat to weak. Expect directional trading opportunities to remain scarce until the India VIX finally crosses back above 13.